Hey guys, what's up? This video is going to be about dealing ranges and how you can use dealing ranges for the evaluation of price, right? So again, the entire concept of a dealing range, of course, is ICTs, but the entire valuation of price itself is by none other than Warren Buffett and Benjamin Graham. Of course, for them, stocks, ICT kind of generalized it, but the creation or the beginnings of it was from the old guys. All right. Okay, so now in order for us to draw a dealing range, okay, we have a bearish dealing range and we have a bullish dealing range. Okay, like that. Now remember how when we spoke about price goes for liquidity and price goes for fair value gaps, right, or to rebalance imbalances in the marketplace, right? These are the points in which you're going to be anchoring your fibs to. Okay, so if you have a gap here, or if you have a liquidity rate here, right, you're going to be anchoring your fibs to these points. Okay, you're going to be anchoring your fibs to these points right there. Come to discount, buy, go to premium, sell. It's as simple as that. Okay, now you can further refine these ideas by using the order block CSD that you should have been focusing on since my last few videos. All right, so now if you look at this, if you look at gold currently, that's the dealing range. Why? We took out a low here and then we displaced higher. Okay, so we are supposed to come back into discount. All right, okay, now if I just take you back a bit to maybe, let's say, all of this price action here. All right, look at it on a case by case basis. So if I'm going to be looking at this on a case by case basis, let's look at it like this, right? So let's look at, on this day, let's look at the London session here, and let's look at the NY session from here. Okay, now in the London session, right, we can see that, okay, did this take a low? Yes, it did. Look carefully. Okay, we did take a low and price is just going higher, so we're displacing up. So as we are displacing up, you are doing this, they're doing that. Price comes down into discount, right? Price comes down into discount and comes into a fair value gap. Okay, comes into a fair value gap. But that reaction is a fair, now see, that reaction is a fair value gap reaction, right? That reaction itself is a fair value gap reaction. So when price goes higher from there, can I anchor this from here to subsequent price action? Yes, you can. See that? Okay, once we go up and once we're attempting to come back into discount, what's this down close? This down close is an order block CSD, buy, take profit. Okay, while you have this parent price swing like that, you can see that also comes back into discount here, and then you have this where price comes back to discount again, right? Comes back into discount again, inducing this low as it should to go higher. Okay, now after this point, after we come back into discount, now for me that is the end of its usage. Okay, that's the end of its usage. All right, now if you consider this, now let's play price. Okay, this is the London session, then we're coming into the NY session, right? Okay, now coming into the NY session here, right, can you see how we took out a low here, that one started going up from here? Okay, we're doing that. Oh, what happened? You go up, we take this high out, this down close is your order block CSD, going to discount into that order block CSD and go long. Keep on extending this out, all premium. Okay, now we have liquidity targets. Okay, over here our liquidity targets can be this all the way up until here. Okay, all the way up until here. What does price do? Never even touches that. Why? It comes into discount here finds a gap, changes its state of delivery, and it goes higher. Okay, cool. None of our business after that. So you can observe the reaction and then take the trade. Now if you look at this day here, right? So right here, if you look at London, which is from here, and NY, which is from here, right? What happened? Okay, we go down, we take our lows, go up. So now as we're starting to go up, right, look, what are we doing? Waiting. Is this it? Is this it? No. Why? I want to see price trade above this down close there. So when we trade above it, then I'm interested in drawing all of this out. Okay, here, what happened? Problem, right? Now you see, even though I have this dealing range, listen carefully, look closely. Even though I have this dealing range, right? Now look at this. See this here? Volume imbalance reaction. That's a child dealing range here. See this here? Fair value gap reaction. I have one here also. See that? If you delete the ones that didn't get used, see this? Equilibrium. Boom. Also, I can use this here, there. But then the question becomes, which one shall I use? Right? Which one shall I use? Right? Something that aligns with this change in the state of delivery there. So ideally, which one will it be? This one. Why? Because this leg of price led to the change in the state of delivery from here. This dealing range led to the change in the state of delivery, and that's the one that we are going to elect to use. Discount, gap reaction here, making this an order block, inducement, long. I know it sounds super easy in hindsight, right? Well, that's the entire purpose of it, bro. Look at it perfectly, and then you should be able to do it live. All right. Okay, so let's look at an example of a short scenario. Okay, here. What do we have? We have price taking out a high. So we're going to take it from here. So this leg led to the CSD, right? So see over here, CSD. That's our dealing range. What happened? Look, perfectly into equilibrium plus some premium into the CSD sell. Now you can just do this like this, right? So that's your entire dealing range as we're going lower, right? So that's your entire dealing range. Now you can have this parent dealing range, then you can have this right here. You can see that we took out a high. Now look closely, okay? Look closely. We took out a high, right? This is our dealing range. From here, we traded lower. There. What happened? Premium, premium, sell. Okay. Then here, high taken, gap filled. That's the condition for drawing a dealing range. From here, draw price down. Here, premium, nope. Here, yes. Goes into it, induces this high, sells. So on and so forth. So you literally have an entire playground for yourself for scalps, for day trades, for swing trading. Depends on the time frame that you're looking at. All right. All right, over here. Now look. What's happening here? Now look. This is the entire bullish dealing range that I'm looking to see whether you can go under it. Then you have up here to down here. Right? So let's make it a bit more precise. All right. You go down. What happened? You see how we have a stop hunt here, right? There. A stop hunt over there. Okay. Now if you view this on the 15-minute chart, yeah, can you see that the stop hunt actually happened here? You see multiple time frame is now important, right? Okay. This stop hunt happened by a wick. Price did not close above it. Yeah. So this is a rejection block. You see that rejection block right there? Can you see that aligns with this stop hunt here? Okay, move that up. there. Okay, move that up there, and that's your premium array. Looking for price to drop into this level here. Okay, and can you see the reason why price is being this slow? I mean, yes, it's displacing, but it's not really moving that fast. That's something I can't tell you all. All right. Okay, so with that said, I hope you guys enjoy the video. I hope you found it insightful. If you have any questions, let me know. Always open to replying. No issues. All right. Okay. And the bias predictor, everyone that got their free trials, so their free trials are over. The bias predictor has a success rate of 70% plus, right? Most of the time 70% plus. So I would say I would actually encourage you to get the bias predictor more than mentorship, because if you know how to trade, if you have your entry models down, if you know how to be bullish, if you know how to be bearish, then using the bias predictor should be a piece of freaking cake. Okay, if I were to show you an example, right? So let's look at today's London bias predictor. Okay, so over here it says London session bearish 3 a.m. to 6 a.m. right? So 3 a.m. is from here. You can see how it's being bearish already, you see. And the daily bias predictor also has been released. So here you can see that the session for the NY session that we're looking is to be bearish. So basically for the NY session we're looking to see whether price can be bearish. Okay, so that depends on the resistance and supports being created, whatever is being broken, that will allow the session to be bearish. Okay, all right guys, so that's it. I'll see you guys in the next one. Good luck and good trading. Bye bye.